Hey veterans, my name is Steve Doherty. I'm the Raleigh VA loan guy. I'm a loan officer in Raleigh, North Carolina, and a United States Marine Corps veteran. Today, I want to talk to you about whether it always makes sense to get a VA loan on a purchase transaction. As you may have guessed, I'm a little biased towards the VA loan, right? This channel is more or less dedicated to VA lending. I'm a veteran. I like working with veterans. I love doing VA loans. But there is a narrow set of circumstances when it does make more sense to go for a conventional loan. At the end of this video, you will know if you fit into this category, whether you should go with a conventional loan rather than a VA loan on your next purchase. Before we dive into today's video, please subscribe to my channel. I post videos routinely on all things VA lending and all things mortgage lending. I am licensed to do loans in South Carolina, North Carolina, and Virginia. If you would like me to get you pre-approved for a mortgage or talk to you about anything related to mortgage lending, I will leave my contact information in a comment below and in the video description. I look forward to hearing from you. Okay, real quick, I want to run through the 8 big advantages of a VA loan. There are probably a couple other smaller ones, but in my opinion, there are 8 big ones, reasons why you would want to go for a VA loan. Okay, advantage number 1 of the VA loan, it permits 100% financing, and it is by far the best 100% financing option out there. In addition to having 100% financing, there are no interest rate penalties for having 100% financing. In other words, there are no advantages to making a down payment, and you're not going to be penalized just because you're not making a down payment on a VA loan. That is different than with other mortgage options. In some mortgage programs, the smaller the down payment, the worse the interest rate. That's never the case on a VA loan. Advantage number 2 of a VA loan, at 100% financing, there is no monthly mortgage insurance. There's a funding fee, which we'll touch on, but there's no recurring monthly mortgage insurance just because you didn't make a down payment. Other mortgage programs do have monthly mortgage insurance, and it can be considerable. It can vary depending on your credit score, the down payment, the loan amount. The VA loan does not have any form of monthly mortgage insurance. Advantage number 3 of the VA loan, the VA loan has better rates, right? In 9 out of 10 scenarios, the VA loan is going to be the most competitively priced from an interest rate perspective. Number 4, the VA has a superior appraisal process. With Tidewater, please check out my other video on what Tidewater is and how that applies to you. But the VA has the most forgiving appraisal valuation process, period. If you don't think I'm right, give me a phone call. I'll change your mind. Advantage number 5, the VA has a superior refinance product called an EARL. It's their streamline refinance. And you can only take advantage of that streamline refinance if you are currently in a VA loan. So if you purchase a home with a conventional mortgage, you can still refinance into a VA loan, but you can't do an EARL. Okay, advantage number 6 of a VA loan is that it permits a much higher debt to income ratio. What does that mean? It means that you can have a much higher budget utilizing VA financing than another mortgage program, especially if you have very good credit. A conventional loan is going to cap you out at 49.99%, regardless of your credit score. Even if your credit score is 830, VA loans can go as high as 72%. That's my personal record. Maybe it's possible to go even higher than that. That is going to translate to you having a much bigger purchase price, more purchasing power, a higher budget. Okay, advantage number 7 of the VA loan is it is much more forgiving of mediocre to poor credit, especially when compared to a conventional loan. You can still go 100% financing with, let's say, average credit or maybe even poor credit, depending on your debt to income ratio. This is very different than a conventional loan. On conventional loans, to be able to get approved for, let's say, below a 690, in my experience, you are going to need to be making a larger down payment, maybe 5, even 10%. If you're in the mid 6s, your down payment may have to be 20% to get approved for a conventional mortgage. Okay, advantage number 8. 1, 2, 3, 4, 5, 6, 7, 8. Advantage number 8 of a VA loan is that it will permit a potentially much higher seller credit, right? So on all mortgage programs, your seller credit is going to be capped at your actual costs. Can't take a seller credit and apply it towards the down payment. You can't walk away with it after closing. But on a VA loan, you can use a seller credit to pay down your debt. This is very, very unique. There's no other mortgage program that lets you do anything like this. Now, there's still eventually a cap, but that is going to free up a lot more of your cash on a short-term basis by going VA than using a different mortgage program. Okay, so we went over 8 advantages. Let's take a look at some of the disadvantages. I hate to do this because I'm such a fan of the VA loan, but let's put some out there, see what you think. And if you disagree with any of these or think any of the advantages or disadvantages or vice versa, leave a comment below. I'd love to have a conversation with you. Okay, disadvantage number 1 of the VA loan. It's not ideal for a fixer-upper, right? If you're looking to purchase a home that is in a poor state of repair, the VA loan could give you problems, and it could give you problems for disadvantage number 2. Okay, disadvantage number 2 is that the VA may force a seller to make repairs to the home. This could be problematic, right? Usually homes that are in a poor state of repair are in that state or in that condition for a reason, right? The seller didn't have the means or the willingness to perform the repairs, and they probably don't now either, just because the VA is sort of wagging a finger in their face and requiring them to be conducted in order to get across the finish line. If the seller refuses to make the repairs required by the VA appraiser, the loan does not close. Now, you do have an opportunity to waive those, but you can't bet on it. When a home is in a bad state of repair, it's going to be difficult to get across the finish line with a VA loan. Okay, disadvantage number 3, you can't rush order an appraisal on a VA loan. Is it possible to call in some favors? Yeah, maybe. But there's no ability to really skip the line or leapfrog other people, right? Keep in mind, in a VA loan, the appraisal request is sent directly to the VA, and the VA sends an appraiser from their stable of appraisers, right? On a conventional mortgage, most mortgage banks have the ability to rush order the appraisal. They're essentially going to tell the appraiser, hey, we're going to give you an extra $300 if you can get this report done in 7 days. We can't really do that on a VA loan. So if for whatever reason you need that appraisal back very quickly, or you want to do a very, very aggressive closing period, let's say 12 days, it's going to be very difficult to do that on the VA loan because the VA loan appraisal process kind of takes as much time as necessary to get it done. And there's no way to cut in line and get it done faster. Okay, disadvantage number 4, the VA has something called a residual income calculation. Really, I don't think this is much of a disadvantage, but I couldn't just leave it at 3, right? So the residual income calculation is a secondary calculation that we perform to make sure that you have enough money left over at the end of the month. Is this really a disadvantage? I suppose, but the VA loan is going to let you have such a bigger budget compared to another mortgage program that if you're getting sort of pinched by the residual income, you're already ahead of the game anyway. But something we have to do on a VA loan that we don't have to do on other programs. Okay, finally, and this is kind of the most important one given our topic of today, which is, should you always use your VA entitlement? The drawback of the VA loan is that you do have a funding fee. Now, I hear a lot, from borrowers or from people on YouTube saying that the VA loan does not have mortgage insurance. I don't really know if that's true, right? The funding fee to me sounds like mortgage insurance, okay? And please check out my video on this topic on the funding fee to learn everything about the funding fee and how it impacts your VA loan. But the funding fee is something collected at closing that can be paid in cash, but 95% of the time, people are financing it. They're adding it to the loan amount. So this may be a disadvantage because on conventional mortgages, you don't always have mortgage insurance. You only have mortgage insurance if you're putting down less than 20%. This is a pretty good segment to actually dive into, okay, will it ever make more sense to go conventional versus VA? Let's take a deeper look. Okay, so there are really 3 scenarios in which it may make more sense to get a conventional mortgage rather than a VA mortgage, even though you have a VA loan, and despite the fact that there are all those advantages to the VA loan with few comparative disadvantages that we just looked at. Okay, the first scenario in which it may make sense to go conventional is, first of all, you have to pay the funding fee. You will pay a funding fee if you are on active duty, you do not have a Purple Heart, or you are a veteran and you do not have a disability rating from the VA. In this case, if you get a mortgage, regardless of your down payment, you will have a funding fee. Now, the funding fee is dramatically reduced if you can put down 5%, but it will still be there. So then you're having this fee that is added to the loan amount, and you're unnecessarily increasing the loan balance. Over time, you'll be charged more interest by virtue of having more outstanding debt. That's how a mortgage payback works. This may not be that big of a deal if you're buying a $200,000 home, but if you're buying a $950,000 home and you're adding, let's say, 1.5% to the loan amount, that's going to add up over time, right? And if you're planning on selling that home in the short term, that funding fee that's been added, that's going to directly cut into your proceeds when you go to sell the property. So again, this is only if you will have to pay a funding fee, right? On a conventional mortgage, if you're putting down 20% or more, there is no mortgage insurance upfront or monthly, right? You don't pay it. So if you're putting down 20% on a home, let's say you just have the cash, right? Or let's say you have proceeds from the sale of another property, you will have a lower loan balance by virtue of going conventional. Now, this is really important. Does that definitely mean that you should go conventional because you're going to be avoiding the funding fee? No, it depends on the interest rate, right? Let's keep in mind that on the most part, VA loans have better interest rates than conventional mortgages. So you're going to want to do a comparison. You're going to want to say which loan will cost me less money over time, the VA loan with a lower interest rate or the conventional loan without the added funding fee. This will depend on a lot of factors. It'll depend on how much lower that interest rate is on the VA. It'll depend on what the funding fee percentage is, which is tied to your down payment. And it will depend on the loan amount, right? Again, if it's a small mortgage, it may not be a big deal, but 1.5% of $950,000, that's a pretty big increase on that loan balance. Okay, scenario number 2, as to when it may make more sense to go conventional over VA, is kind of related to number 1. On conventional mortgages, when you're making a large down payment, right? That means you have a low LTV or low loan to value. That's just the percentage that the mortgage balance, the loan balance, is compared to the purchase price of the home, or on a refinance, the appraised value of the home. Sometimes on conventional mortgages, and this is especially true on refinances, when you have a low LTV, let's say below 60% or below 50%, the interest rates can be very, very competitive on conventional mortgages. They can be similar to VA loans and sometimes even lower. So if you are going to be aggressive, if you have a really low balance compared to the value of the home or the purchase price, again, you're making a big down payment, and getting back to number 1, you have a funding fee, it could make more sense to go conventional rather than VA. Okay, and finally, scenario number 3, when it might make more sense to go conventional rather than VA, is if you want to preserve your VA entitlement, leave it untouched. Now, I have another video on this topic when you're buying multiple homes using your VA loan, and there's a VA loan max calculation that comes into play. Please check that video out. But if you want to preserve your VA loan untouched, that may make it easier to buy home number 2 with a VA loan. What am I talking about? Let's say you're purchasing a primary residence and you think you're only going to be there for 3 to 5 years, right? Maybe it's a starter home. Maybe you've relocated to an area. You're not ready to buy your dream home yet. You're just going to get a 3-bedroom ranch. But you're pretty confident in 5 years, once you get a promotion, right? Or once your spouse finds meaningful employment, that you're going to be upgraded and you're going to be buying a much larger house. In that scenario, you may not want to go VA right out of the gate. If you do, you could run into a maximum loan amount on home number 2, right? The VA does let you have more than one VA loan at a time, but a maximum can kick in on home number 2. To avoid that, you can go conventional on that home number 1, and that will preserve your entitlement so that when you go to buy house number 2, you have sort of unrestricted VA entitlement, at least from a loan amount perspective. Again, my name is Steve Doherty. I'm the Raleigh VA loan guy. I'm a loan officer here in Raleigh, North Carolina, and a United States Marine Corps veteran. I'm licensed to do loans in South Carolina, Virginia, and North Carolina. If you would like me to get you pre-approved or talk through your VA loan scenario, please call me, send me an email, shoot me a text message. I'd be more than happy to work through your questions.